Welcome to the Hurst Trading Room. This is our video update for the 2nd of April 2013. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. Let's take a look at the markets and see what we're expecting to happen next. First of all, the S&P 500. And here is the default analysis for the S&P 500. In other words, I'm not pinning any troughs or influencing what Sentient Trader is doing at all. And for some time now, Sentient Trader has been presenting this analysis, which has a few interesting points to note. The first, of course, is that the 18-month cycle trough occurred in the middle of November, according to this analysis. We had a very clear 40-day cycle, which ensued following the mid-November trough. And that very clear 40-day cycle warned us that there was probably a 20-week dominant cycle active in the market. And a dominant cycle of 20 weeks in length, of course, meant that the market was going to continue going up in very much a straight line, which is certainly what it did. It also told us that we should expect a very subtle 80-day cycle trough. And you can see that according to this analysis, that 80-day cycle trough occurred at the beginning of February and was indeed a very subtle trough. In fact, the market only moved down for a day or over a weekend into that trough. And so there was a very subtle 80-day cycle trough. It is, of course, possible that the trough that we saw towards the end of February was, in fact, the 80-day cycle trough. And I've got an analysis that I'll show you in a moment, which assumes that that was the case. But regardless of which of those two troughs was, in fact, the 80-day cycle trough, it was a subtle trough, as was expected. And now, of course, the market has kept going up and will be forming a peak soon, if it hasn't already formed a peak. And the next thing that we expect with a dominant 20-week cycle is for the market to come down fairly strongly into the 20-week cycle trough. And that 20-week cycle trough, you can see from this nest of lows, is expected in about the 3rd week of April, according to this analysis. We'll take a look at an alternate in a moment. But certainly according to this analysis, 3rd week of April is when we're expecting that 20-week cycle trough, which means that this analysis is telling us that we are expecting a move down over the next 2 or 3 weeks. And so when we look back on the previous 3 or 4 months, what we should see is we should see a good, clear 20-week cycle shape. Okay, so what are we going to be doing next in terms of trading? Well, according to this analysis, we will, of course, be going short. Let's zoom in a little bit and identify the FLD and price interaction sequence and see what we're expecting next. Now, this had a very subtle 80-day cycle trough over here. And so our A category interaction was an impossible interaction to trade, but it was nevertheless an interaction between price and the FLD. And our B category interaction was over here as price came down below the FLD. C category interaction over here as it bounced back up again. And we probably witnessed the D category interaction about 2 weeks ago over here, as price came down to the 40-day cycle trough, which according to this analysis was in the middle of March. And then we had our E category interaction as price broke back up again. And last week I spoke about that interaction, and I also pointed out that the target for that interaction was at roughly the 1570 level in the S&P 500, and that level was achieved last week on Thursday. And so that move has been fulfilled, if you like. The price cross above that FLD over there has been fulfilled, and so that move is over. And so what happens next? Well, of course, an F category short trading opportunity, an F category interaction between price and the FLD, which will happen when price comes down below this FLD over here on its way down to the 20-week cycle trough. And so an F category short trading opportunity is still our next trading opportunity in the S&P 500, as it was last week. and so we're going to wait for price to cross below that FLD, at which point we will enter into a short trade in the S&P 500. Now, I've mentioned a few times an alternate analysis. Let's quickly have a look at that alternate, and here it is over here. The alternate analysis differs fundamentally in only one way, and that is that the 80-day cycle trough is considered to have occurred towards the end of February instead of in early February, and it is still a subtle trough. A subtle trough is a trough that doesn't seem as strong or as visually apparent as you would expect the trough of the 80-day cycle to be. And indeed, that was the case with the trough in late February. As you can see, the market only came down for about a week. In fact, a little less than a week. Market came down from that peak to this trough over here. So that qualifies definitely as a subtle trough. And it is possible that that was a trough of the 80-day cycle. If that is the case, then what are we seeing in terms of what's happening now in the market? Well, let's zoom in again and take a look at our interaction between price and the FLD. If this was indeed the 80-day cycle trough, or indeed possibly even the 20-week cycle trough, you can see the circle and whiskers is right there, so it was perfect timing for a 20-week cycle trough. It doesn't make any difference to our trading decisions, and the A category interaction as price broke up above the FLD was over here. So there's our A category interaction. Our B category interaction was as price came down to the FLD, and then of course price tracked along the FLD, and that was our B category interaction over there. C category interaction was what happened last week as price broke back up above the FLD. And so what are we expecting next according to this analysis? Next, we're expecting the S&P 500 to break down below the FLD in a D category interaction, which is a D category trading opportunity. And so it doesn't matter which of our analyses turns out to be the correct one. Both of them are telling us to stand by to enter into a short trading opportunity in the S&P 500 as the S&P 500 crosses below that 20-day FLD. Let's take a look at the Nasdaq. In the Nasdaq, we have exactly the same two possible analyses that are playing out, and so I won't speak about both of them because they are in fact exactly the same. The only difference is that the Nasdaq has a 20-week cycle trough here instead of an 80-day cycle trough. As I've already pointed out, that makes no difference to our actual trading because, of course, a 20-week cycle trough is synchronous with an 80-day cycle trough. And so in terms of our FLD and price interaction sequence, the two are identical. And so in terms of trading the Nasdaq, I'm going to focus only on this analysis because this analysis, to my mind, is the most likely analysis. The most likely analysis that is playing out in the Nasdaq, certainly. So let's zoom in and take a look at what has been happening since that trough at the end of February, the 20-week cycle trough, according to this analysis. And let's take a look at our price and FLD interaction sequence. There is our A category interaction. Here is our B category interaction as price came down to the FLD. And that occurred around about the time of the 20-day cycle trough, which of course is exactly what we saw over there. And price slipped down even further. And it is possible that, of course, that trough over there was in fact the 20-day cycle trough. And in fact, the number of days, I think, was exactly 20 days. So it is very possible that that is the 20-day cycle trough. But it is also possible, because the cycles are running very short in this analysis, and it's an important thing to bear in mind, it is also possible that that was in fact a very early 40-day cycle trough. And that is why Sentient Trader is presenting the analysis in the way that it is at the moment. If you take a look at the average wavelength of the 40-day cycle, you can see it is running very short at the moment at 23.3 days. So that's a very short 40-day cycle, of course. And so it is just possible that is what happened. If the 20-day cycle trough occurred in either one of these two positions, over there or over there, then of course we would have seen a C category interaction following that, and the next interaction would be a D category interaction as price comes down below the FLD. If, on the other hand, this trough over here on the that looks like the 18th of March, if that trough there was in fact a trough of the 40-day cycle, then the price cross up above the FLD following that that trough over there would have been our E category interaction. So I'll put E with a question mark, and our next interaction is of course the F category interaction. So we have exactly the same situation in the Nasdaq, that we are looking at either a D category or an F category interaction happening next. Fortunately, the trading decisions we make on the basis of those two possible interactions is identical. In other words, we are looking at entering into a short trade next as the Nasdaq crosses down below the 20-day FLD. However, the Nasdaq has been doing something else which complicates things ever so slightly, and that is that it has effectively been tracking along the FLD for the past pretty much 3 weeks. As you can see, on Thursday of last week, price managed to break away from that FLD, and there were a few days in the past few weeks where price didn't actually straddle the FLD, but it has been effectively straddling this FLD for some time now. The problem with that, of course, is that it makes it difficult for us to actually define a clear entry point. Price yesterday on Monday came down to the FLD. We certainly didn't enter a trade at that level, and the reason for that has to do with our trading rules. On Mondays, we are very cautious about entering trades on Mondays. There is often volatility, particularly when that Monday is a public holiday in some areas of the world, as it was yesterday. Yesterday was a public holiday associated with Easter in many parts of the world. It wasn't in America, and trading was open in America, but we certainly didn't enter into a short trade at the level of the FLD yesterday. What has been happening so far today, and I'm recording this video on Tuesday, of course. In fact, I'm recording the video before the American markets open, and as you can see, it looks as if the price has bounced off the FLD and is heading back upwards. And so, in fact, it looks as if the price hasn't successfully broken away from this FLD. And when price is tracking along the FLD, as it has been doing for about 3 weeks in the Nasdaq, you've got to be very careful about setting your entry levels at the level of the FLD, because price is still tracking along that FLD. And so it will do what it did yesterday. It will come down to the FLD, and then it will bounce back up again, which is what it seems to be doing today, and it might continue doing that. It might continue doing that for another week or so. It's very unusual to see price tracking along the FLD for as long as 3 or 4 weeks, but of course it does happen. And so where would we enter into our short trade? Well, there are several possible entry levels that you could choose. One of them would be the low of yesterday's trading. So if price drops down below the low of yesterday's trading, that might be a point at which you would want to enter into your short trade. Another level is, of course, the level of this 80-day VTL that I've plotted on this chart. As you can see, here's the 80-day VTL, and it's a little bit below price, and so it would be quite far removed from the potential FLD crossing level, but it also offers a potential entry level. There is also another trend line that one could draw. It is not in fact a valid trend line, but it is of course a trend line that you could draw from this trough over here through that trough over there, and you will find that it comes up to pretty much this level over there. So you have options in terms of choosing your entry level. The entry level that I would choose for today, given the fact that the market has bounced up a little bit already today, would be yesterday's low. So if price falls below yesterday's low during the course of today, then I will enter into my short trade. As the week progresses, of course, I will choose a sensible entry level according to the rules that we follow in the FLD trading strategy. Let's take a look at the euro to US dollar. The euro to US dollar is in the process of forming the 40-week cycle trough that we've been expecting. As you can see at the moment, there is a very staggered nest of lows. There is the first part of the nest of lows, and then it sort of breaks off to the left. And in fact, the actual expected date for the 20-week cycle trough is right over here towards the end of April, and the 40-week cycle trough is only expected sometime in May. So we have a very staggered nest of lows, and that happens when you have cycles that are changing their wavelength. And of course, the principle of variation, which tells us that cycles are constantly changing their wavelength, is very active in the markets, and cycles are always changing their wavelengths. And it's one of the things that keeps analyzing a market according to Hurst cyclic principles constantly fascinating, is tracking those changes. It is unusual to see quite such a staggered nest of lows as we're seeing at the moment in the euro to US dollar. But over the past few weeks, it has this staggered nest of lows has caused me to be cautious about entering into long trades in the euro to US dollar, and so I have kept clear of it. But this week, I am now standing by to enter into a long trade because I believe that the time is right. I think that it looks as if though that 40-week cycle trough certainly should be forming round about now, or might have formed last week in the markets. And if it turns out, with the benefit of hindsight, not to have been the 40-week cycle trough, then certainly I believe that a trade on the basis of price crossing the 20-day FLD shows a high chance of profitability. And so I will be entering into a long trade when price crosses this FLD. And one of the things that reassures me in making that decision, if you like, has to do with the sequence of FLD and price interactions. And it's not a perfect sequence, but let's speak through the sequence following this trough at the beginning of 2013, which you can see, according to this analysis, is an 80-day cycle trough. And I'm convinced that was at least an 80-day cycle trough. It might have been a longer cycle trough, but certainly it looks like a very good 80-day cycle trough. Here is our sequence of interactions: a good, clear A category interaction, a very typical B category interaction here as price came down to the FLD, tracked along the FLD for a few days, then the C category interaction as price bounced back up again. That BC interaction is surrounding a 20-day cycle trough in the market. So that was a very good, clear FLD and price interaction. And then, of course, the D category interaction as price crossed down below the FLD, coming into the 40-day cycle trough. So far, things are looking very good. That looks like a textbook a sequence of FLD and price interactions. Then things went a little bit astray. And in fact, all that happened was that a longer cycle started pressing down fairly hard, and a longer cycle came to dominance, rose to dominance. Probably the 20-week cycle rose to dominance and started pushing down quite hard as the market came down into this 40-week cycle trough. And so instead of seeing a good, clear E category interaction as price crossed above the FLD, price in fact failed significantly to cross above the FLD. Nevertheless, there is an interaction between price and the FLD. Remember that the interactions that we track or that we watch are not simply a matter of price crossing the FLD. We also get price reaching towards the FLD. That's a perfectly valid interaction between price and the FLD. And so we had an E category interaction, which was not an ideal textbook interaction, but it was nevertheless an interaction. And so there was our E category interaction sometime in early February, I believe. The F category interaction almost certainly occurred over here towards the middle of February, so that was our F category interaction. Then we had a G category interaction over here, followed by an H category interaction. And you could argue that the G category interaction price tracked along the FLD, and so the G category interaction lasted for a period of a little bit over a week there, and the H category interaction pretty much happened over a weekend, and that certainly makes very good sense. And that occurred round about the 20-day cycle trough on the way down, which is what we expect. We then saw a double GH category interaction, and here price rose up to the FLD again, and that was about 10 days ago. And last week, and I spoke about this in last week's video, we saw the H category interaction as price moved down again. A double GH interaction often occurs around about the 10-day cycle trough as you're approaching the major trough that you're expecting, and so it looks very good. That's a very reasonable explanation for what's happening in this market. What's going to happen next? Could we see a triple GH interaction? We could, but in my experience, triple GH interactions are rare. And so, in fact, I am standing by for an A category interaction as price crosses up above the FLD. So that's what I'm expecting to happen next in the euro to US dollar. I am expecting price to bounce out of a 40-week cycle trough probably, but certainly I am going to trade the interaction between price and the FLD. You must remember that when you're trading using the FLD trading strategy, you are trading price interacting with that FLD. Even if you're wrong with your analysis, very often the interaction between price and the FLD proves to be a profitable thing to trade. And so I'm going to be trading that interaction, and I am going to be watching that FLD this week and entering into a long trade if price comes up and crosses that FLD. Let's take a look at the British pound to US dollar. Now, last week I mentioned that I was bending the rules a bit in the British pound to US dollar because, of course, I have entered into a long trade, which was an A category trade because of this A category interaction between price and the FLD. And I entered that trade on a delayed basis. I didn't, in fact, enter it at the level of the FLD. And in fact, this FLD has shifted slightly, and originally the FLD was right up at the high level on this bar, this Friday bar, and so I entered on a delayed basis. I entered about 2 weeks ago. I entered into my long trade over there. Now, strictly speaking, if I had been absolutely following the rules, this A category interaction would have been over last week, as price fulfilled its target to the upside. So strictly speaking, that A category trading opportunity is over. However, I spoke about it last week, following a major trough, and I believe that this trough is a trough of at least 18-month magnitude. It might even prove to be a trough of 54-month magnitude, but I'm very cautious about calling 54-month cycle troughs too prematurely. So it's certainly a trough of, or it is probably a trough of at least 18-month magnitude. And following a trough of that kind of magnitude, we expect price, of course, to come back down to the FLD, as I mentioned last week, in a B category interaction. We then expect price to track along the FLD a little bit, and then to break upwards in a C category interaction. And so I'm bending the rules for the FLD trading strategy at the moment. I probably should have exited my A category trade last week, as it clearly dropped away from the fulfillment of the A category projection as price crossed over that FLD. But I'm bending the rules a little bit because of what I believe is happening in this market, and I'm hanging in there. And in fact, I am still in a profitable trading situation. My trades are still in profit, only slightly. They are above my entry level. And I'm expecting a C category interaction next. And so I'm expecting price to pull up and away from this FLD once it has completed its tracking process. And the B2C tracking period can often be for a week or two. even longer. As you know, we've witnessed a long tracking period in the Nasdaq, and so when that tracking period is complete, I expect price to break away to the upside, and of course my trades will go into profit. I will be tightening my stops as a matter of interest in this trade, because of course I'm expecting price to track along the FLD and then break to the upside. If price drops down below this trough over here, then clearly something else is happening in the market, and so I will be tightening my stops. And so I've reduced my risk tremendously. I've reduced my risk to about a quarter of what it was originally on this trade, but I'm still expecting to see a profitable outcome for the trade in the British pound to US dollar. And that concludes our video update for the 2nd of April 2013. Please provide any feedback or comments or questions that you have in the box below this video in the Hurst Cycles Trading Academy. And I look forward to seeing you next week in the Hurst Trading Room. And as always, wish you profitable trading.